You're right. It's been a tough couple of days. The sector's been under some pressure. You know, we've been in a demand-driven upcycle for quite a while. This has buoyed earnings and everything else. We're reaching the point now, given some triggers around demand, whether it's rates or whether it's trade and tariffs or everything else. People are looking for that trigger to send demand south, and I think people now are girding themselves. I think Q3 is fine, but people are girding themselves for estimates in Q4 potentially to come down. We've had pre-announcements in automotive and a number of the key markets in the sector. The best time to hold semi-stocks, frankly, is after numbers start coming down, but before they hit bottom, so to try to anticipate that trough. The worst time to hold semi-stocks is right when numbers start going down, so that's kind of where we are right now.
Oh, so that insinuates that the worst is not even close to being over.
Well, the sector also tends to be very anticipatory, because remember, the stocks tend to overshoot in both directions, so people sort of, pull the ripcord before they see it coming. I think the one positive thing for the sector right now is actually valuations. Because the stocks have been anticipatory, they've actually already sold off in advance. I mean, quite often what you'll see is when the stocks stop going down on the cuts or on the bad news, that's the time to buy. And right now, the sector as a whole, collectively, is actually trading at it may not be obvious, but it's at a fairly sharp discount to the S&P. I think semis as a group are trading at something like a 15 or 20% discount to the S&P right now. That's not quite where things were. If you go back a few quarters, things have definitely sold off in anticipation.
Yeah. Stacy, Pete Najarian has a question for you. He owns, I know, many of the chips in your universe.
Yep. So the one I'm most interested in right now, though, would be Intel. Obviously, we know that there's a search for a CEO. Is that really part of the weight that's on them, on top of what we're getting outside, but the fact that they haven't chosen a CEO yet, and so we haven't really gotten a directive in terms of the very top position and how they're going to be approached forward?
Well, absolutely, it's sitting on them because there are and look, Intel's numbers, by the way, don't get me wrong, have been phenomenal, but there are a number of very kind of key strategic issues that they are facing that are going to require leadership and direction from on high to come down into the company. And we don't know what that direction is going to be yet. There are a number of potential candidates, both internal as well as external. I think the choice of whether which way they decide to go, the board decides which way to go, will determine, give the message in terms of whether or not they see the current issues at the company as being more of a blip and kind of manageable. That I think would correspond to maybe an internal candidate. If they go external, particularly an external candidate who does not have prior Intel experience, that would suggest that the changes that need to happen are broader, and some of those changes may or may not be particularly palatable for investors that might need to live through them. So it's absolutely weighing on it right now.
Part of the issue, Stacy, Scott again, you say if they go in, if they go out, why are they taking so long? I mean, investors can't get any clarity on anything as this goes on week after week and month after month.
But at the same time, you don't want to make a rush choice. I mean, you look at the last one. So even with BK, when Onolidi stepped down, it took him 6 months or so to actually put Brian in the spot. And he was an internal candidate. He had manufacturing experience. And that choice, I mean, in hindsight, given where they're facing now and where they seem to be positioned, was not a good choice. And that wasn't even something that they rushed into. I mean, this is not something that you can rush into. You have to make sure you make the right choice. The consequences of making a poor choice will vastly outweigh the consequences of taking a little longer. So I think they're taking their time.
Stacy, are chip stocks affected by higher interest rates? And specifically, are you marking down your outlook for the profitability of these chip companies because of higher rates?
Yeah, I mean, companies that have a lot of leverage, obviously, if that debt is variable, will have expenses go higher. Most of the companies in the space are not hugely levered. It's not a massive profit driver one way or the other. To the extent that rates up or down influence the overall economic environment, I think is a much bigger potential driver. Semis obviously are very correlated to the economy, but it's also very difficult to size the impact of something like that outside in.
Yeah. Stacy, good to have you on. We'll see what happens in this space, but it's been top of mind lately, so we're glad to have your point of view. And congrats.